Welcome to Talk Tickers, your essential guide for breaking down the latest earnings calls. We distill the critical information, helping you quickly grasp the most important insights without the noise.
Today we're dissecting Udemy's second quarter 2025 earnings. It was quite a quarter, some significant financial shifts, and, well, a really clear statement about their new strategic direction, particularly around AI.
That's right. So if you're following Udemy, or maybe just curious about how a company pivots in, such a fast-moving market, this call was packed with interesting details.
Definitely.
We'll summarize the headline numbers first, and then really unpack the strategic moves that management believes are going to define its future. Okay, let's jump straight into the numbers for Q2 2025. This quarter ended June 30th, and Udemy, well, they delivered a pretty remarkable quarter, hitting a milestone investors have been watching very closely.
Indeed. The big news, they achieved their first positive GAAP net income since the IPO. That's $6.3 million.
Wow. Okay.
Yeah, quite a turnaround from a $31.8 million loss just last year. And non-GAAP EPS, that came in at $0.16, which handily beat the down in 12 consensus.
Okay, so profitability is the headline. What about revenue?
Revenue reached $199.9 million. That's up 3% year over year, and it also topped analyst expectations.
But it's not just the top line, right? You mentioned efficiency.
Absolutely. Look at adjusted EBITDA. It soared to $28.4 million. That's a 14% margin.
14%.
Yeah, a massive 420% increase compared to last year, and way above their own guidance. And free cash flow is strong, too, around $39 million for the quarter.
So all signs pointing towards a real focus on profitability.
Exactly. It looks like a company showing a real commitment there.
This initial picture, it definitely gave investor sentiment a lift. It signals maybe a turning point for Udemy, moving towards sustainable, profitable growth. Okay, let's unpack this a bit. How did they actually achieve these numbers? Let's dive into the mechanics, maybe start with that operational efficiency you mentioned.
Well, what's really interesting is the disciplined approach to cost management you see across the board. Gross margin improved nicely, 66% GAAP and 67% non-GAAP.
And that's up year over year.
Yep, a notable increase.
Yeah.
It was driven mostly by focusing on growing those subscription products and some strategic tweaks to revenue sharing they made earlier in the year.
And it wasn't just gross margin improving, was it? Operating expenses, too.
That's right. OpEx saw an 800 basis point improvement compared to Q2 last year. So an 8% improvement.
Wow.
Those expenses now stand at 56% of revenue. And that flows directly to that big jump in adjusted EBITDA we talked about.
So this stronger financial footing gives them more room to maneuver for future growth.
Exactly. More flexibility. Whether that's organic growth or maybe even looking at acquisitions down the line. It's a key takeaway, I think, for anyone looking at the long-term picture.
Okay, let's shift to the segments. Udemy Business, the enterprise side, that's still the main growth driver, right?
Correct. Udemy Business revenue hit $129.3 million, up 7% year over year. And ARR, annual recurring revenue, reached $520 million. That's up 6%.
What's fueling that growth? More customers, bigger deals?
Both, actually. An increase in total customers and a higher average contract value for new deals. They closed about 40 new deals over $100,000 ARR just this quarter.
Okay, here's where it gets interesting, though. I saw that this growth was partly offset by lower expansion rates and higher churn, especially from the SMB cohort, small and medium businesses. What's going on there?
Yeah, that's an important point. It raises questions about customer retention. Consolidated net dollar retention was 95%.
Which isn't terrible, but
large customers were stronger at 99%. Management talked about these COVID contracts from 2021, 2022. These were multi-year deals, apparently, that maybe didn't have the same level of implementation support or exec sponsorship as newer deals. So they're creating headwinds.
So how are they fixing that?
They're actually outsourcing SMB renewals to a third-party firm. They expect net dollar retention to bottom out in Q3, be flat in Q4, and then, importantly, start accelerating again in Q1 2026.
Okay, something to watch closely then. What about the consumer side? Revenue is down slightly.
Yeah, $71 million, down 4% year over year. But there are some early green shoots, as they say.
Like what?
Well, consumer subscription GMV gross merchandise volume grew over 40% year over year in June, and it's tracking towards 50% in July.
So the subscription part is growing fast, even if the total is down.
Exactly. They passed 200,000 paid consumer subscribers, and subscriptions are now 15% of consumer revenue, up from 13% in Q1. Just a definite mix shift towards subscriptions.
Which gives them more predictable revenue overall.
Right. Subscriptions overall are now about 70% of total company revenue. It builds a much more predictable base.
They also mentioned a one-time $2.5 million benefit from consumer breakage revenue.
Yeah, a small one-time item in the consumer numbers for Q2.
Okay, so profitability push, efficiency gains, strategic shifts in monetization. But the big story seems to be this Udemy 2.0 vision. It's all about AI, right?
Absolutely critical. This is where Udemy really wants to stand out. The CEO, Hugo Thurzen, he laid out 4 strategic priorities. The fourth one, positioning Udemy as the leading AI-powered skill acceleration platform. That's the key differentiator.
It's a kill accelerator.
Yeah. He emphasized they're not playing the same game as competitors. They're not just adding AI features. They're rethinking the core offering around it.
So what does that actually mean for, for you, the learner, or for a company trying to upskill its people?
It means moving way beyond just being a content library. Udemy is using its huge data moat, all that data from over 215,000 courses and millions of users, to embed AI tools right into the enterprise tech stack.
Oh.
They've launched a beta for their Model Context Protocol server, MCP server.
Really?
It lets companies plug Udemy's learning content directly into AI tools like Claude and ChatGPT. So you get personalized learning right where you work.
That sounds powerful, embedding learning in the workflow.
Exactly. And they've launched new enterprise packages, SKUs like AI readiness and AI growth. These aren't just for tech teams. They're designed to build AI fluency across the whole organization.
And for individuals. Anything new there?
Yes. They've introduced AI-powered roleplay. You can practice skills like sales pitches or difficult conversations with an AI coach. Instructors have already created over 7,000 unique role plays.
Huh, interesting.
There's also an AI assistant within courses and AI design tools for instructors. And significantly, they appointed Azzy Goldme as the new CTO. She has deep AI expertise. It really underlines their commitment.
So this whole pivot, plus expanding partnerships with folks like Indeed and UKG and pulling into markets like Japan, it feels like a much broader strategy, trying to capture new revenue, increase stickiness.
Absolutely. It's about becoming indispensable, really embedded in how learning and work get done.
Okay, let's talk investor context. How did the market react to all this? You said the JAP profit was well received initially.
It was, yeah. The stock popped right after the earnings call. But we've seen some of that gain given back since then.
Why the pullback, do you think?
It suggests investors are, carefully weighing things. The strong margins and the profit beat are great, but they're likely looking at the near-term revenue guidance, which was a bit softer, and that ongoing SMB churn we discussed.
Right. So what's driving that caution? And maybe more importantly, what could be the catalysts for a more sustained positive reaction down the road?
Well, like I said, the Q3 revenue guidance is a bit modest. It implies some contraction on the consumer side and maybe slower growth for Udemy Business in the very near term. The market really wants to see durable top-line reacceleration.
But management pointed to green shoots.
They did. And this is where it gets really interesting when you look forward. The pipeline.
What about it?
Management reported generating the highest number of big deals, those $100,000 plus ARR deals, in their pipeline since 2022. And across multiple regions.
Okay, that's a strong leading indicator.
Exactly. And Udemy Business win rates, they've increased for both upselling existing customers and landing new ones. Plus, new bookings from their self-service team plans grew over 35% year over year. These aren't lagging results. They suggest future growth.
Suggesting an inflection point might be coming.
That's the narrative, yes. And you have the macro trend. AI transformations forcing companies everywhere to rethink skills. Huge demand for upskilling.
And that lets Udemy target budgets beyond just traditional L&D.
Precisely. Think sales enablement, call center training. Departments with their own budgets now needing AI skills. Udemy's new AI solutions can target that spend directly.
Okay, and how does the full year guidance reflect this?
It reflects that sort of cautious optimism. Revenue projection is $784 to $794 million. But, and this is key, they raised their adjusted EBITDA guidance to $84 to $89 million.
So confidence in continued profitability improvements, even if the top line takes a bit longer to reaccelerate.
Exactly. And looking further out, if those COVID contracts roll off as expected, net dollar retention should improve. Combine that with potentially stickier AI products from Udemy 2.0, that could be a powerful mix heading into 2026.
And the new CTO building out the back end for new monetization models, like platform fees.
Yeah, platform fees, maybe consumption charges.
Yeah.
It opens up whole new ways for them to make money long term. Definitely something to watch.
All right, let's pivot to our not financial advice segment. Remember, this is purely for entertainment. Spark some ideas for your own research. We're going to pitch a couple of, let's call them outrageous but plausible trade ideas based on this Udemy deep dive.
Okay, first idea. Consider a long-term bull call spread targeting maybe a 30-40% return over the next year. So you'd be looking at buying a call option maybe expiring mid-2026 with a strike price around, say, $9 or $10.
Okay, buying a call.
And then simultaneously selling a further out-of-the-money call, maybe at $12 or $13, to finance part of the purchase.
Right, a call spread. What's the thinking behind that?
The thesis here is that the market might be underestimating the compounding effect of this Udemy 2.0 strategy. You've got the potential improvement in net dollar retention as those old contracts roll off. You've got the growing pipeline from the new AI SKUs, apparently already 25% of the pipeline.
Okay.
And the move into non-L&D budgets. If management is right about that inflection point, and if the Q3 call shows continued subscription momentum and maybe even just stabilization in SMB churn, that could be the catalyst.
So you're leaning into the improved profitability, the raised EBITDA guidance, and betting the AI strategy starts to really pay off in the numbers next year.
Essentially, yes.
Yeah.
Betting that the market catches up to that potential reacceleration.
Okay, interesting. What's the second idea? Something more adventurous?
A bit more adventurous, maybe. Consider a bear put spread on some of his direct competitors, hedged by a long position in Udemy itself.
Ooh, okay. So shorting the competitors, but staying long Udemy. Explain that one.
The argument is that Udemy, with its marketplace model, its huge course library, and this first mover push into being an AI platform, is creating a significant data moat. Traditional publishers, maybe relying on more static content, might struggle to keep up, especially with fast-moving AI topics.
You think Udemy's AI integration, like the MCP server and roleplay, could become essential tools for companies?
If they truly become essential partners, embedded in the tech stack like Udemy hopes, it could imply, well, maybe a zero-sum game for some parts of the enterprise learning budget.
So as companies consolidate their learning tools and demand AI-powered stuff,
other players with maybe less agile models or static catalogs could face real pressure. This trade isn't just betting on Udemy succeeding. It's betting that its strategic pivot actively outcompetes its rivals.
Capturing Udemy's upside with the long position, while the short on competitors captures that relative outperformance. Betting on Udemy playing a different game, as the CEO put it.
Exactly. It's a bet on that different product positioning and strategy winning out in the AI era. Again, purely hypothetical, do your own homework.
Okay, so to wrap things up, Udemy's Q2 2025, a pretty significant turning point. First, Jack net income, strong operational efficiency.
Definitely. Challenges remain. No doubt that SMB churn, the consumer segment softness, but the company is pivoting hard towards becoming an AI-powered skill acceleration platform. That's the headline strategy.
And Udemy Business, the growth engine, is showing robust signs. Good growth, promising leading indicators in the pipeline, all driven by those AI investments and expanding partnerships.
Yeah, it positions Udemy for potential accelerated growth in the coming quarters, especially as that Udemy 2.0 vision really takes shape and those AI tools get embedded deeper into companies.
Thank you for joining us on Talk Tickers. As always, we encourage you to do your own research and analysis. If you have questions or maybe your own outrageous trade ideas, feel free to reach out.
Until next time, keep learning, keep growing, and happy investing.